Baker Hughes still carries an oilfield name, but its underlying business model is actively pivoting toward industrial energy technology. The primary catalyst for this shift is the massive structural electricity demand generated by artificial intelligence and hyperscale data centers. While traditional drilling remains a stable core, the company is now positioning its portfolio to capture this electricity demand as the primary driver of new growth. Breaking down Q2 2026 financials, legacy oilfield services revenue held flat at $3.45 billion. By contrast, the total forward-looking order book surged 49% to $10.5 billion, driven by a record $7.1 billion in industrial and energy technology orders. Trailing revenue reflects the past. The order book is the true leading indicator of a market's future direction. The most critical metric of the quarter was the booking of 2.7 gigawatts of gas turbines for data centers and mobile power. Hyperscale data centers require massive, firm, off-grid power on a much faster timeline than traditional utilities can provide. This timeline outlines their commitment to that demand. They plan to double turbine manufacturing capacity by 2028 and hit $5 billion in power systems revenue by 2029. By focusing on data centers, Baker Hughes is trading volatile commodity cycles for a stable, secular demand curve. Hardware alone isn't enough. To build a defensible solution, Baker Hughes acquired Chart Industries, adding cryogenic and thermal cooling technology to their portfolio. This diagram shows how bundling Baker Hughes power generation with Chart's cooling systems creates a unified, integrated data center solution. Transitioning from selling standalone products to integrated outcomes makes a B2B platform significantly harder for competitors to displace. This case study offers 3 actionable directives for B2B sellers. First, prioritize your pipeline and forward-looking order book over trailing sales data. Second, insulate your business by aligning with long-term structural demand rather than spot commodity markets. Third, bundle distinct capabilities into integrated solutions. Selling the entire outcome increases pricing power and creates a more defensible market position. This strategy uses the cash generated by a stable legacy core to fund a deliberate, strategic move toward high-growth technology.